Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. Well, we are in the middle of a busy week filled with market action. In fact, this afternoon, the Federal Reserve will deliver its first interest rate decision of the year. The expectation is that rates will remain at their current level. Of course, the press conference from Fed Chair Jerome Powell will be a market-moving event. Now, the central bank's decision comes before tech earnings kick off in earnest. Large cap companies like Microsoft, Tesla, and Meta are set to report after the close today. We'll include coverage of those results and comments, of course, on artificial intelligence during tomorrow's show. And as we await the market open, let's take a look at what is on tap this hour. The president of the New York Stock Exchange, Lynn Martin, will join me in studio soon. With the S&P 500 near a record high and companies coming to market, we'll talk about the innovation underway at the New York Stock Exchange that makes it the envy of the world. Plus, we'll get a deeper dive into what today's rate decision means for the markets. Harvey Flax, Director of U.S. Interest Rates Futures Business Development at Intercontinental Exchange, will show us the data. And on this day in history, more than a century ago, the NYSE installed an announcer board to assist brokers with their orders. We'll take you through time and show you how the stock exchange has modernized along the way. Nearly a month into the new year, momentum has been building in the market. We've seen new record highs, better than expected corporate earnings, and companies tapping the capital markets through IPOs. To better understand how it's all happening here at the NYSE, it's an honor to be joined by NYSE President Lynn Martin. Lynn, welcome.
It's great to be here with you.
It's great to have you. You have had a very busy January, of course, on the Bell podium at the World Economic Forum in Davos and in our nation's capital.
Yes.
What is the sentiment that you're seeing?
The sentiment that I've been picking up no matter where I go is incredibly positive for 2025, for the state of the U.S. economy, and for businesses that are focused on America and headquartered in America. Tremendous amount of optimism about what's to come.
To that end, we saw President Trump and key members of his cabinet visit the New York Stock Exchange, ring the opening bell in December. How has the business community received that message?
You know, it was an absolute surreal day to have the president, incoming members of the cabinet, including the vice president, all at the NYSE. It was a historic day. We've never had a full incoming cabinet at the New York Stock Exchange before, and President Trump was the first president to ring the bell since Ronald Reagan in 1985. So it's been a bit of a gap. I think it was received incredibly well for a couple reasons. Number one, it was a uniting force for America. Everyone focused on America is the place to raise capital. It's the home of innovation. It is where the entrepreneurs raise the capital that they need to change the world. And the president, really acknowledged America's importance in the global economy by coming to the New York Stock Exchange. It was also just a really positive time for the CEOs who are looking forward to 4 years of building businesses as opposed to increased taxes on their business. The pro-business America is really what was being celebrated that day.
Of course, at the forefront of the New York Stock Exchange is innovation. How is the stock exchange leveraging technology like artificial intelligence to enhance the trading experience behind us here on the floor?
Well, Kristen, I could not employ enough people on the floor to process all of the incoming order messages that we do every day. I mean, 750 billion incoming order messages. A buy, a sell, or a match trade comes into our platform. Can't find 750 million, billion, whatever people to process those types of messages. You need good technology. Good technology is table stakes in this digital age. So we're constantly focused on evolving our technology. And because we are a self-regulatory organization, we take that responsibility incredibly seriously. Mm-hmm. We apply AI technology, machine learning techniques to surveil our markets for nefarious behavior because of our obligation to keep our markets front and center, the gold standard of markets in the world.
We hear the buzz behind us during this show, Lynn, every single morning. And of course, as the stock market has reached new record highs this year, so too has Bitcoin. What new products will the NYSE offer to modernize markets as they continue to evolve?
You know, we've always been a pioneer on new markets. You look at the Bitcoin ETFs, for example. It was a product that we started the process of discussing with market participants and regulators in 2016. Took 8 years for those products to come to market, but we spent a lot of time on them because we truly believe in having good regulatory footprint, a good regulatory wrapper around an opaque market such as Bitcoin. It's a market that we're continuing to watch closely. I'm incredibly optimistic because I've been saying for the last 3 years that that market needs clear regulatory guidelines, and it feels as though this administration is very focused on providing those clear regulatory guidelines. If you have those guidelines, it will enable the product to be adopted by institutions, so more widespread adoption. Without those regulatory guidelines, it's just a question mark. I think that's why you're seeing Bitcoin trading at the record highs. It's more the sentiment that's driving up the price.
Well, speaking of trading, we know in the fall the stock exchange unveiled plans for near 24-hour trading. How will that roll out?
Yeah, I mean, it's right now pending with the SEC. We have a rule filing pending with them. It's going through its process. The reason we went to the 22/5 trading is, from our perspective, it's about reliability, resiliency, and security. And at the core of markets, one of those aspects is driven by the aspect of central clearing. Central clearing, in our case DTC, is now moved to 22/5. So our job is to provide that extra layer of reliability and resiliency from an execution standpoint to feed into the clearinghouse, which will guarantee delivery or settlement.
There's a lot going on.
Yep.
So I've got to ask you one last question, Lynn, as we are just almost 1 month into 2025. What else is there to look forward to here at the stock exchange this year?
A return of the IPO markets. Let's start there. You know, we had Flowco a couple of weeks ago. That's done really well. We had the largest energy IPO in more than a decade. Happened just last Friday. Venture Global. We've got a variety of other companies that are looking to tap the public markets. Feels as though we're just starting, though. It's going to be a paced reopening. It's not going to be a variety of companies coming all at the same time.
Lynn Martin, president of the New York Stock Exchange, setting the scene for us here ahead of the trading day. Lynn, thank you as always.
Thanks for having me.
All right, well, stay with us because before this market open, we're going to continue to talk about technology names with 3 Magnificent 7 companies set to report results after the close today. A Wall Street expert will reveal what it is to look out for in this tech sector. That's next.
So Brightwave is an investment research platform that uses artificial intelligence to help asset managers understand more about the markets than is humanly possible.
And what would you say that makes you unique, though, from others who are currently on the market?
A number of things. So we have an incredible engineering team. So for myself, I established and led the language model engineering practice at Databricks. Created the first language model to demonstrate that open source technologies could exhibit the kinds of behaviors we've come to expect from ChatGPT. My co-founder is the former CTO of a federally regulated derivatives exchange and clearinghouse. It is.
Yeah, it's really amazing.
And his first deep learning patent was filed in 2018. We've got engineers from Meta and Instagram, award-winning research engineers, commercial team from UBS and McKinsey and Goldman Sachs. It's a stacked bench, and it has allowed us to execute on very, very difficult technical problems. If you think about the number of factors that are relevant to an investment decision. It exceeds the limits of a person's ability to keep it in mind simultaneously. And we see an opportunity with language models to create a technology that allows a person to connect the dots across millions of documents and see a story that nobody else has noticed in order to identify a mispriced asset.
And you decided to come to Money 2020 this year because you had a major announcement about your Series A funding.
That's right.
Yeah.
We have announced a $15 million Series A, preempted by Decibel Partners, one of our seed stage investors, and including participation from Omers Ventures. We're extremely excited about this. This brings our total funding in the past 17 months to $21 million. We've quadrupled our revenue since our Series Seed announcement in June or July, forget exactly when. And it's happened quickly. We've seen vigorous traction, brisk demand from across financial services.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. With technology names making up the biggest portion of the market, we want to home in on this sector as earnings from companies like Microsoft, Meta, and Tesla are on deck. Joining me now with more is Gil Luria. He's head of technology research at D.A. Davidson. Gil, great to have you on the show as always, especially with that early morning wake up for you on the West Coast. Ahead of these earnings tonight, what is in focus for you?
Well, the focus is going to be on the impact of AI on Microsoft and Meta tonight, especially in terms of their levels of investment and how it's driving growth. And today it's going to be a lot of conversation about the impact of DeepSeek and other small models and how that changes the equation for their ability to grow and how much they need to invest.
So to that end, Gil, we've all been following the DeepSeek news. Really hard to escape it, of course, based on what's played out in the market this week. But what specifically from these technology giants, each of them a little bit different, right? Microsoft, Meta, and Tesla. What do we need to hear from each of them that could calm perhaps some of the jitters or questions around DeepSeek?
So for Microsoft, what we want to hear is that their Azure growth will accelerate in the first half of this calendar year. That's what they told us is going to happen, and it's very important that they reaffirm that message tonight. We also want to hear from them that they're going to reassess their CapEx schedule and budget based on these recent developments. If you think about what's happened in terms of the impact of DeepSeek and other models that are now coming out, it really changes the business for OpenAI, which has driven a lot of the AI growth for Microsoft. OpenAI has two businesses. One is the $20 a month consumer business, and another one is the API corporate business. The $20 a month business is at risk now because DeepSeek is offering a comparable model for free. And then the API business is at risk because DeepSeek charges $2 a million tokens, while OpenAI charges $60 per million tokens. So Microsoft, we want to hear them tonight say, hey, this has changed the business. It's changed how the business of AI infrastructure is going to work. We're going to reassess our CapEx plans.
Do you
and
think,
then on Meta,
if I could, Gil, just to jump in there, Microsoft, we know, is a little bit off of its record high, but obviously still elevated when we look at its performance during this bull market. Is that something that you think we could hear tonight from Microsoft, what you want to hear?
That's right. Microsoft has probably been the poorest performer for the last 6 months of the Mag 7 because that overinvestment in CapEx is coming at the expense of margins, of cash flow, of return on invested capital. And so investors have been concerned that in order to continue to drive growth, Microsoft is going to have to invest more and more and sacrifice margins more. If they come out tonight and say, look, we're going to reassess CapEx, maybe we don't need to spend at these rates because these AI models are getting so efficient that maybe we have enough build-out capacity in the pipeline, investors are very much going to welcome that.
Now, Meta, a bit of a different story, of course, a little bit different company, but a large cap tech name nonetheless. That stock right at a record high, Gil. What should we know about Meta?
So more of a mixed situation for Meta. So on one hand, this is a company that uses AI already to make its products better. So the better the AI, the more ads they sell. The better the AI, the more they can charge for those ads. That's good news. This forward progress in AI, this leap forward in progress in AI that DeepSeek represents, will make their core product better. On the other hand, Meta has been the open source leader in AI models, and that's now been overtaken by DeepSeek. So Meta has to communicate a message of how they're going to use their considerable CapEx spend to catch up to DeepSeek and get their leadership back in AI. And that's a tough task given how big of a leap forward the DeepSeek models represent.
So Tesla's unique. Obviously, we know that Elon Musk has his hands in artificial intelligence, but that might be more blatantly on display with some of his AI ventures versus Tesla per se. How could that play out tonight?
Well, that's right. Again, two different stories for Elon Inc. On the Tesla side, progress in AI is very, very good because the future of the company really relies on full self-driving taking off in cars, thus lending itself to robo-taxis, etc. And a big leap forward in the technology means full self-driving will work better as Tesla adopts it. On the other hand, Elon has invested a tremendous amount in XAI, Grok, and those models. And again, to be the leader in open source AI models, and now DeepSeek has overtaken him as well. So a lot of that investment now looks like maybe it didn't pan out yet, and they really have to do a lot of catch up to get back into a leadership position, just like Meta. So again, a mixed bag for Elon Inc.
Gil, the president of the New York Stock Exchange, Lynn Martin, joined me at the top of the show. She was expressing that business sentiment from what she's seen here at the Stock Exchange, at the World Economic Forum, and in our nation's capital this month is positive. Certainly, we see the economy, broadly speaking, sticking with that tune. How does that mean that these stock prices could move in the next 12 months?
Yeah, the very good positive perspective that investors have right now is not a coincidence. It's because we all believe that the loosening regulatory environment, that more mergers and acquisitions, Lynn talked about more IPOs, those are the kinds of things that have a very broad benefit across the board to the small and mid caps that will get bought, to the large caps that buy them, to the new issuances. Well, there's a lot of expectation that the financial regulatory environment is improving, which will allow the market to do well, while at the same time, this new leap forward in technology we've already had big leaps in technology on AI, and now we have another one that should help other technology companies build new products, deploy them in a more efficient way, and gain more usage. So there is a lot of optimism in the investor base right now.
Gil Luria, we always appreciate it. Again, thank you for getting up early for us. You're on the West Coast, we're on the East Coast, but Gil is the head of technology research at D.A. Davidson, and certainly a busy day ahead.
Thank you. Thank you, Kristen.
All right, well, stay with us because up next we'll dive deeper into the upcoming Fed decision as well as a new partnership in the name of clean energy. That's next.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, the Fed and tech giants will dominate the headlines this afternoon. An energy deal this week is also generating plenty of buzz. And for more on that, I want to send things over to my colleague, Trinity Chavez. Trinity?
Hey, Kristen, good morning. That's right. Nuclear power is in the spotlight as the Trump administration pushes for American energy dominance with a big focus on innovation in nuclear fuel and reactor technology. Now, this week, U.S.-based Lightbridge announced a partnership with NYSE-listed company Oklo, a nuclear tech company chaired by Sam Altman, of course. And together, they're going to co-locate a commercial-scale fuel fabrication facility and explore new ways to reprocess used nuclear fuel. Now, here to talk more about this exciting partnership and what it means for the broader future of nuclear energy is Seth Gray. He is the CEO of Lightbridge. Good morning, Seth.
Good morning. Good to see you.
It's great to have you on the show this morning. Now, I do want you to elaborate more on the significance of this collaboration and how it advances nuclear innovation in the U.S. for the years to come.
Trinity, I think it's a very significant collaboration to see some of the publicly traded pure nuclear companies starting to collaborate with each other in ways that will advance what each company does, especially if two companies like Lightbridge and Oklo that aren't competing with each other, but have some commonality. So that by joining together in a commercial fuel fabrication facility that we're looking into can save both companies capital cost, operating cost. There are engineers and other personnel we can share, equipment we can share, perhaps licensing even with the NRC. So it's quite significant when you look at Lightbridge with developing fuel for the existing kinds of reactors, the smaller versions of those kinds of reactors that are coming, and Oklo looking at designing new kinds of reactors to come together in ways that potentially could significantly help both companies.
And the Trump administration is advocating for American energy dominance with a strong focus on nuclear energy. How does Lightbridge's metallic fuel technology align with this broader vision? And what role do you see it playing in the U.S. energy strategy moving forward?
Yeah, it's what we're all about. I was one of the CEOs that met with President Trump in his first term and helped lead toward what was called the Nuclear Fuel Working Group report that led to a lot of Department of Energy and national lab programs that are supporting companies like Lightbridge now that we're benefiting from, and we see continuing and perhaps expanding under the Trump administration. At Lightbridge, we're right now doing our testing and development based at the Department of Energy's Idaho National Laboratory. And in terms of energy dominance, there's nothing like nuclear power. It just will produce more power, for the size of the plant by far than anything else that could possibly be done. And Lightbridge fuel will allow the existing plants to produce even more power. That can help justify reopening closed reactors, ending the licenses of existing ones, building new ones, and designing more, even smaller ones that will produce more power than they otherwise could have. So this is very good for, really for the world that needs so much more energy right now.
And with leaders like Sam Altman and Jacob DeWitt involved in Oklo, how does their expertise and influence help shape the direction and impact of this sort of partnership?
Well, tremendously. I first met Jake when we were very early at Lightbridge, and he and Caroline Cochran were starting Oklo. We very much have admired them and what they do. And the investors and other leaders in the companies are incredible. So Sam Altman coming in as chairman of Oklo shows the link between Silicon Valley, AI, data centers, and nuclear energy. And that's just one use case. The CEO of ExxonMobil says that oil and gas production will decarbonize, and that will be a massive need for clean energy that nuclear can provide. Smaller reactors like Oklo is designing could even be used for fracking operations and others, move to remote locations. So it's really a tremendous opportunity.
Seth, we have about 60 seconds left here, but I do want to get your take on something. So given your involvement with the Nuclear Energy Institute and the Civil Nuclear Trade Advisory Committee, what policies or regulatory support do you believe are critical and crucial to accelerating the adoption of nuclear energy and your company's technology?
Right. Well, I'll start with the ADVANCE Act that has passed Congress and has become law. And the Congress needs to hold the Nuclear Regulatory Commission's feet to the fire to make sure that they're maintaining the highest standards of safety while speeding up and cutting the costs of licensing and of making sure companies know exactly how long it will take and how much it will cost. And Lightbridge is really at the forefront of this, where we're going to be starting to do licensing in faster ways, we expect, taking advantage of the ADVANCE Act.
Yep. Well, you've brought up a lot of key points there, Seth. Thank you so much for joining us on the show this morning. Again, Seth Gray, Lightbridge Chairman and CEO.
Thank you, Trinity.
Now, don't go anywhere. The opening bell is just minutes away.
How has this partnership propelled Snowflake's growth and deepened its ties to the broader financial and technology communities?
Well, you know this. The New York Stock Exchange is the most storied stock exchange ever on the planet, and we're thrilled and honored to be on it. But there's also a very deep collaboration between the firms. It's at the level of us being the data platform for ICE and for the New York Stock Exchange, and being an important distribution mechanism for all of the amazing data that the NYSE wants to share with its customers and partners. We get a lot of great feedback about where Snowflake should evolve from Lynn and her team. And things like the tree lighting and the judging are the icing on the cake that demonstrate how closely the companies work with each other to partner, but just as importantly, create success for all of our giant customers. It's a deep partnership that I'm very, very grateful for. I tell people that AI is already magical because these language models can do things like understand fluid language, like the language you and I are speaking, and make sense of it, extract context from it, and do that effortlessly. We knew that how people are going to consume information was going to be changed forever. Just like, back when the first smartphones came, most people in the world kind of simultaneously realized that there was a before and an after, that everybody was going to have these amazing devices with them. I think we're going to think about AI the same.
All right, we are officially off to the races. The stock market open for trade on this Fed decision day. We see stocks taking a pause, of course, right near record highs before that 2 p.m. Eastern decision hits the tape. Well, joining me now to talk more about these markets and the path forward is Mark Newton. He's the head of technical strategy at Fundstrat Global Advisors. Mark, great to have you on the show as always.
Thank you, Kristen.
How does this market look to you at these levels?
You know, I think it's gotten a lot better in recent weeks. We had a period of consolidation and churning, which served to get a lot of investors off to the sidelines. I think people were overly pessimistic regarding the new administration and their potential for widespread tariffs, which now has come to be, you know, something that can be easily digested by the market and is not that overly negative, at least for now. So, you know, technology, to its credit, we have seen some bifurcation. In tech, semiconductors had been hard hit, but yet a lot of that money is now going into software. So the stocks like Microsoft, CRM, a lot of the bigger names, ASML this morning, you know, interesting for semis. I think in general, technology is fine, and that's the big takeaway for investors is that this deep-seek worry really did not serve to derail the technology trade.
You have such an interesting insight, Mark, because you look at the chart patterns and the technicals as we teed you up for. What do the technicals show us specifically about technology names that will be reporting after the close today?
You know, most of these are in very, very good shape. You look at Meta, you look at Microsoft. I think the ASML win has some good, you know, carryover as to how some of these other companies potentially could report. So most of these so-called Mag 7 remain in excellent shape. And we've seen a little bit of deterioration in NVIDIA. The volume was very high. Of course, we saw almost a record amount of market capitalization loss, but it was a one-day event. And the majority of technology is still, you know, remarkably strong. And so, you know, the big worry for investors is that, you know, the majority of stocks have not kept up with the market. It's all been tech, but I don't think that's a bad thing, you know.
Do you think technology can continue to lead this year?
I do. I think we're still in this growth phase. I sense it with rates. You know, we are officially in a cutting phase, and that's going to continue. So that's going to lead to growth, and you know, we've been in a momentum. That was the number one factor in the last year. So that's going to be supportive of, you know, technology. A lot of these companies that have changed our lives for the better will continue to thrive. So I like tech a lot, but I also like financials, industrials, consumer discretionary. And, you know, we saw a movement just yesterday in some of the, you know, some of the shipping lines, cruise liners, airlines have been very good. So the consumer seems to be fine, at least on the upper end. The lower end, there's a little bit of bifurcation there as well. But things still seem to be in much better shape than what investors will give it credit for.
Let's talk about the Fed decision this afternoon, 2 p.m. Eastern. The market almost entirely anticipates that the Fed will keep rates steady. But of course, what we hear from the Fed Chair Jerome Powell at 2:30 could be a market-moving event. What do you anticipate?
Yeah, it's really less about the decision. It's pretty much baked into Fed fund futures in swap markets right now that we're going to see nothing happen today. So it could be a dovish pause. It's really Powell's message, but he can't afford to say much because of what we know about so much data coming out between now and the March meeting, along with the potential for tariffs potentially to ramp up. So those things would make Powell cautious about changing their guidance too much, in my view. So today is really an afterthought. It's not about the Fed meeting necessarily. It's more about the economic data to come. You know, but markets remain in very good shape. It's just interesting that technology over the last couple of days has really moved opposite to what the market's done.
It's interesting because there has been so much focus on tariffs with this new administration, but as you mentioned, the market seemingly has been able to absorb it, and we've pretty much interpreted it as a negotiating tactic over the course of these past few weeks. What other policies, what other matters that this administration will be dealing with, like the deficit, for instance, that could have an impact?
Yeah, that's a big deal. And look, the trade balance that came out this morning could be disappointing to the incoming president. Seeing a trade balance of minus 120, 125 billion, that was largely a lot more than you know, expected. You know, my thinking is a lot of this was sell the rumor, buy the news into the Trump inauguration. Many people were fearful of tariffs. They were fearful of just the policies. And so the market sold off, you know, albeit very slowly since December. But we saw a huge move up 100 basis points in Treasury yields pushing up. That has since started to be reversed. So as Trump took office officially, we've seen yields start to roll over. We've seen the dollar roll over as a lot of these policies have come to be, not as devastating to the market as what investors expect.
Do you anticipate broad-based gains?
That's going to take some time. For right now, it's all technology, and we need to see that, I think, sometime this year, and we will. As interest rates start to come down on the long end a lot more sharply, we can see a broad-based recovery. We can see small caps and mid caps finally pick up, regional banks, biotechnology. It has been tech-led, but that's not a problem. I think that tech is still 30%. We're seeing more evidence in the last few months of financials, industrials starting to recapture some of that momentum. That makes me optimistic for this year.
Mark Newton, Head of Technical Strategy at Fundstrat Global Advisors. Mark, always a pleasure. Thank you.
Thanks, Kristen. Likewise.
All right, well, we have plenty more to cover on NYSE TV Live, including a conversation with Kevin O'Leary, entrepreneur and investor, about what he has seen across the economy.
Orbit is a space logistic company. Actually, we have been the first space logistic company in the world, pioneer. What does it mean? Space logistics for us means taking care of customer assets in space, so satellites.
But what you're describing, it can't be easy. So talk to me more about how you go about optimizing in-orbit services while also reducing costs for your clients.
You can consider the launch vehicle, the rocket, as a bus, leaving each passenger at the terminus. Our satellite, our orbital transfer vehicle, that's the technical name, is released at the terminus together with other passenger. But our satellite has on board third-party passengers, small satellites on behalf of other companies. And if the rocket is a bus, we are Uber, taking each passenger to their respective home, which is the target orbit. They could do that on their own, which with traditional methods takes 6 to 10 months, thus wasting 1/3 on 1/4 of their operational life. We can do that in much lower time. So the result for the end user is getting to revenues earlier and extending the operational life of their asset.
There has been increasing demand when it comes to the utilization of space-based technologies. Talk to me about how D-Orbit is positioning itself from a business standpoint to keep up with the growing demand.
Besides the traditional standard services, we now see a big demand for something new, which is cloud computing in orbit. The quick, immediate need of
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, with Donald Trump's return to the White House, many are wondering how his policies will impact global markets and emerging technologies, including cryptocurrency as well as social media. Here to break it all down is none other than Kevin O'Leary, also known as Mr. Wonderful. Kevin, thanks for joining us this morning on the show.
Thank you.
Now, with Trump returning to the White House, how do you think his policies will impact the broader crypto market? And will we see a more regulation or a freer market for cryptocurrency?
Well, it's not only affecting domestic policy. We're starting to see other markets immediately, for lack of better words, snap to, because what's been holding back this market is a regulatory framework to integrate it in with existing financial institutions. And I'll give you an example. Now that we know Trump is going to focus on crypto, particularly in the areas of the rules on owning it, like let's take the big granddaddy, which is Bitcoin, but also digital currencies used for trading currency, and so digital payment systems. These are the two big areas of regulatory focus. So, if you think about the G7 or the G20, the markets where most of the sovereign wealth is managed, on a normal basis, you would put anywhere from 1% to 3% into an alternative asset class like Bitcoin. Virtually none of that has been done yet because there's no way to market it into the existing infrastructure where you know you're compliant. In other words, if you have to issue to the SEC because you're managing funds in the US, and there's no policy on how you actually put Bitcoin into your portfolio, in your own software even, it goes down to that, there's no way on earth you're going to do it. So they have it. But now they're looking forward to having this occur in countries like the UAE, Switzerland, Australia, and Canada, where there's an exchange called WonderFi. They're now talking to banks, where a banking client can say, look, I want to put 5% into Bitcoin, but I have no way to do it. The bank doesn't provide it because it's not compliant. They'll allow them to do that at some point. That's the speculation. And so that's why you're seeing so much interest specifically in Bitcoin and digital currencies.
And you brought up WonderFi. This is a company that you have been heavily involved in, a Canadian cryptocurrency company. What role do you see crypto playing in the broader global financial landscape, especially with this new administration?
Well, I took a position in that company under the premise that at some point, the banking system in Canada would have to go to the largest, most liquid exchange to provide services to their clients. It hasn't happened yet, but that's why I'm so optimistic, is that it's going to happen soon. I've been waiting years for this. It's an investment premise, not only here, but also in the UAE, where the M2 exchange exists. These are going to become part of financial infrastructure. So in a way, if the regulator is not litigating you anymore, as we had in the last regime, and they're now providing you with rules, in the case of WonderFi, the OSC, it operates under the OSC, at some point the bank can say, okay, clients, the Canadian banking system has 5 behemoths, and it's a very structured market. But there's huge interest in Bitcoin, and the only way they're going to be able to provide it is to find some exchange that can actually do it within the banking system. And my assumption, my investment thesis, is it's going to be WonderFi, and that's why I own that stock. But it's no different than what's going on in the US or in other countries. This is the era, the Trump era, of compliance and regulatory ground rules and frameworks for finally getting this whole crypto thing worked out. The US and North America generally should lead in crypto, and because of what we've done, and the regulatory or instability of it, it's mostly moved off to other jurisdictions where the research is done. It's got to come back domestic.
And Kevin, the future of social media continues to dominate headlines. How do you see certain platforms affecting global markets, especially with the rise of DeepSeek dominating the AI space right now?
Yeah. Well, obviously, if people thought previously that we weren't in the light word would be competition. I think the reality is an economic war with China. It's also going to involve AI. The country with the most advanced AI is going to win militarily as well, and I think Trump's figured that one out. We have to really start focusing on our ability to maintain a lead position versus China. Now, there's a lot of speculation in the case of DeepSeek. How many NVIDIA chips did they rip off? Between 50 and 60,000 is the rumor. Did they buy them in the black market? Who knows? Did they rip off Microsoft code? IP law in China, as you know, doesn't exist. And so they don't have a problem doing this in other sectors, and they're going to do it again in AI. And so all the more to put more pressure on China, because AI is all about IP, intellectual property. Who develops these engines? How much do they spend? I'm calling BS on the idea that this platform DeepSeek was made for $6 million. I think that's complete. That's just not true. And I think it's a state-sponsored platform that has now been leaked out into the American market, so that if you download it, it scrapes your email and sends it right back to the same issue that we had with TikTok. We have laws for that. My guess is this platform will also fall under that same order from Congress and maybe shut down. You just don't know. I think it depends what lawmakers decide to do when they look at it more closely. But you install any of this stuff on your phone, you're open for your data being scraped going back to China. And I think that's going to become part of the whole narrative in the competition and how we deal with social media. Mm-hmm. It's a really big problem. And so we know what's going to happen with TikTok. I mean, either it's going to be acquired by an American syndicate, hopefully the McCord O'Leary syndicate, or it's going dark. Now that could happen for many of these other platforms, and we'll have to wait and see what occurs. But the clock is ticking on TikTok. It's down to just over 60 days now.
But I do want to get your take, Kevin, as a businessman, as an entrepreneur, especially as an investor. Where do you see the future of business and investment going with platforms like these?
Well, I'm very encouraged by the productivity that AI is providing. In my own companies, which stretch across all 11 sectors of the economy, we have embedded in various services AI, and it's whether it's issuing watch insurance or whether it's something to do with providing customer service, or whether we're analyzing how much wine we should grow in different varietals for O'Leary fine wines. We're using AI. We have to determine, using these algorithms, how to forecast demand so we reduce our cost of capital. And we're doing it across pretty well every business sector. And we're just in the first inning. So I'm extremely positive about the potential. And one of the reasons you see such buoyancy in the market, although of course there's volatility, but most companies, whether they be large or small, are using AI because it's just a good tool to reduce cost.
Yep. Well, there's going to be a lot that we're going to be following here on the show. Definitely a lot to look out for on this front. Thank you so much for joining us, Kevin O'Leary, global investor and venture capitalist.
Take care. Bye-bye.
Now we're just over 4 hours away from the first Fed decision of 2025. And for more on that, I do want to send things over to Kristen.
Trinity, that's exactly right. The Federal Reserve will deliver its first interest rate decision of the year this afternoon. It precedes comments by the Fed Chair Jerome Powell in a regularly scheduled press conference at 2:30 p.m. Eastern. For more on what we can expect from the Fed, I want to bring in Harvey Flax, Director of U.S. Interest Rates Futures Business Development at the parent company of the New York Stock Exchange. That's Intercontinental Exchange, or ICE for short. Harvey, welcome.
Good morning, Kristen. Thank you for having me.
Great to have you, as always. Certainly a timely segment today. What are the futures markets indicating about today's meeting?
Sure. So the futures market's pricing in a near 100% probability that the Fed will remain on hold this afternoon, keeping their monetary policy rate at the current 4.25% to 4.5% range.
It is interesting, of course, in terms of the market views on shorter-term Fed policy. What do you see those as?
So at the December meeting, the Fed released their summary of quarterly projections, and known as the dot plot, and that indicated that the Fed anticipates implementing 2 25 basis point rate cuts this year, with I guess employment and inflation more or less in check where the market believes it should be at this moment in time. The market is anticipating that the Fed will remain on hold in the short term. It will retain its easing bias, but it will have a cautionary outlook as it waits for the new administration's policy initiatives to roll out. Now, they are pricing in a 30% probability that the Fed will lower rates by 25 basis points at its next meeting in March. And the first full 25 basis point cut for the year should take place at the June meeting.
Interesting. So that gives us about 6 months of a headway here. Harvey, when we think about longer term, what are those market views when it comes to the Fed policy, and why?
Sure. So after the June meeting, that second 25 basis point full cut is priced in to take place in the fourth quarter. Right now, it appears to be at the October meeting. Now, looking at 2026, the market is actually pricing in, indicating that the Fed will remain on hold for almost the entire year, pricing in a single 25 basis point rate cut to take place at the very end of the year at the December 2026 meeting. Now, Fed monetary policy is basically driven by two metrics, employment and inflation. And of course, GDP is certainly factored into the equation. Now, I guess with the market's bias towards a neutral Fed for all of 26, it's indicating that it's cautious about the implications of the new administration's policy decisions, certainly around tariffs, taxes, as well as the deportation process, immigration. Of course, this is early days. The immigration process has begun. The tariffs have been signaled to be announced, or targeted tariffs to be announced as soon as February 1st, and tax policy is expected to be known somewhere in the second quarter. Now, the market will closely assess and watch any downstream impacts to the Fed's dual mandate of these policy decisions, whether positive or negative, and of course they will price in any future implications to Fed monetary policy based on those assessments.
Harvey Flax, Director of U.S. Interest Rates Futures Business Development at Intercontinental Exchange. Harvey, thank you.
Thank you, Kristen.
All right, well, stay with us because up next, Franzi is helping connect users with franchising opportunities at notable brands, and the company's Chief Executive Officer will join us with more. That's next.
So you work with many organizations undergoing digital transformation. What role does observability play, and where does Dynatrace fit in?
When you're going through a digital transformation, most likely you're going to change a lot of your digital estates. You're building new applications, you're connecting maybe a new mobile app or a new service to your backend systems, connected to your AI system. So the first thing you need to do where observability helps you is really understand your entire IT estate. What are you running? Which components or which applications are talking to others, what's working, what's not working, because you're obviously going through this change, you're going to iterate over this environment and keep evolving it. That's one role that observability is playing. And once those services are then live and users are using it, observability helps you to optimize the user experience. Think just 2 days ago, when there was the British Airways outage, how do you feel at an airport if the service is not great? So observability does both. It actually helps you to understand how your system is working and how the individual pieces play together. And it also helps you to understand how users feel about your service, whether it's working for them. And then finally, if something goes wrong, and every now and then obviously something does actually go wrong, it helps you to find the issue quite quickly and helps you to also to resolve the root cause, or what the actual problem might be. Because as you can imagine in complex landscapes, there's thousands, even millions of components. And observability and Dynatrace also helps you to pinpoint exactly where the problem is.
Now, Dynatrace has been working with AI for more than a decade. As the discussion regarding the cost of generative AI investments and ROI heats up, tell me, how is Dynatrace helping organizations to get the most value out of AI?
So we have a dedicated solution that we call AI observability. So we just talked about observability. Now we're extending it just to the realm of AI, so helping understand how much.
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio. Now, franchising has long been a path to business ownership, but finding the right opportunity can often be overwhelming. But Franzi, a company that's using AI-driven insights, is working to connect aspiring franchisees with top brands. To find out more on this, I am joined by Alex. He is the co-founder and CEO of Franzi. I just wanted to jump right into the conversation, but you work with thousands of our NYSE listed companies. Many that we were talking about, McDonald's, Planet Fitness, UPS. These are just a few of the names that you work with. Talk to me more about the motivation in starting Franzi and the concept behind this, how it all developed.
Yeah, so I've been a serial entrepreneur my whole life and experienced firsthand just how big that impact can be on you as an individual, the communities that you're operating in. And one of the things that I learned was the access to entrepreneurship is hard sometimes. You don't know where to start. What's the right business for me? Do I have to start something from scratch? Where do I get financing? And so I wanted to build a platform that made that incredibly accessible. We'll pair you with lenders, we'll pair you with the right brand, and we also give you a coach. All of this is free to walk you through that business buying process.
But I do want to talk to you about the data analytics and how do you utilize this technology to really help individuals make the best decision, and what makes your approach so unique from your competitors?
Yep, so we have a proprietary data set of over 3,000 franchise brands. So we take that, we've scraped all this financial information, customer reviews, and then we start to get first party data from you as a prospect. You come to the site and say, here's my risk tolerance, here's what my kind of financial situation is, here's my background and operational experience, and then these are my goals. We then use AI to start matching you with a top list of top 5 curated brands based on everything we know about you and everything we know about the brands coupled with the conversations you're having with a coach. So there's still that human touch and that human element, but we're using a lot of data and AI power behind it to match you with the best fit and cut through the noise.
Talk to me about how key partnerships really enhance what you're trying to do with your business strategy and bottom line.
Yep, so we're working with a lot of the best lenders in the space for franchising. They know how to pair you with, is it an SBA loan or is it a Rob's rollover, which is it's a program that you can use to borrow against your 401k assets to start your own business. So it's really about making sure that we give you the resources you need every step of the way so that buying a business is less intimidating and more accessible for the average American.
What are the biggest pain points that your customers report seeing, or what are you seeing in the sectors?
So there's not a good place to start. People go down a Google rabbit hole and they're not sure, of the thousands of brands, how to filter it down, for what fits for me. There's business brokers that exist today that might not always be fully aligned with you as an individual. They make a 60% commission in some cases on the back end, and that's not always readily available or transparent. And so the pain point is access, transparency, and alignment, and Franzi hopes to solve that. Think of us as the Zillow for franchising.
And what's your biggest goal for 2025? And we have about 30 seconds left.
Yep, our goal for this year is to honestly help as many people become entrepreneurs as possible. Our lofty goal is to create 1 million entrepreneurs in the United States through our platform and through franchising specifically as a business model.
Well, thank you so much, Alex, for joining us today. It was great having you on the show. Again, Alex Smerznak, he is co-founder and CEO at Franzi. Now, as you can imagine, the trading floor of the NYSE gets pretty loud at times, especially when the market opens, and it's been this way for well over a century. For more on this, I do want to send things over to my colleague Kristen Scholler with more.
That's right, Trinity, and we want to go back in time, in this case to more than a century ago. On this day in history, January 29th, 1881, the NYSE installed the mechanical authenticator board on the trading floor of the old building, which existed from 1865 to 1901. These worked as a paging system, displaying a broker's badge number when he had an order waiting. Well, this annunciator board was used every trading day until they were replaced in 1969 by a radio paging system. When the annunciator system was disassembled in 1979, the individual numbers were framed and many are displayed in the NYSE building today. Incredible to take a look back and see how the stock exchange has modernized over time. All right, well, that's going to do it for today's show. Thank you for watching. As always, we await the Fed decision and those tech earnings, and we'll see you back here tomorrow morning, same time, as always, 9 a.m. Eastern. Have a great day.
What happened?
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.